once you get a very clear signal from like literally the largest, most powerful country in the world that no, hey, Bitcoin is the special one. This is just like these are not the same thing. These are just fundamentally different categories. One is this going to be completely different, digital gold, macro asset, and then hey, all of you guys can go fight out at tech platforms. That's just a completely different market there. And so that is, I would say, like broadly, a lot of the re-rating that obviously Ethereum has had over the past few years is people are realizing Bitcoin is over there, Ethereum is over here in this bucket. So that's a smaller bucket now. And then there's also that mix of like, okay, now you need to fight for the market share within that bucket. And obviously Solana's gained market share.
What's up, guys? This is Boccaccio, the bad host.
And the better host, Danny.
Today we have a very, very important announcement for you. We are hosting Permissionless in Brooklyn. What dates?
It's going to be in June 24th through the 26th.
Very good. You can use code 0x10 to buy your tickets. We're going to do lots and lots of stuff. Dinners.
Games. You'll get to meet the whole crew, the OX research crew, hopefully a bunch of the Blockworks research and other Blockworks crew. And maybe a dunk tank.
We're going to have fun. Whatever we can smooch off of Yano and Mippo, we're going to do it. So if you are a 0x research listener, make sure to use code 0x10 to buy your tickets. Danny, any parting words?
And we'll see you there.
Nothing said on 0x Research is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and any views expressed by anyone on the show are solely our opinions, not financial advice. Boccaccio, Ryan, and our guests may hold positions in the companies, funds, or projects discussed. What's up, guys? Welcome back to another episode of 0x Research. Today, I'm joined by Daniel Smith and Jon Charbonneau. Jon, thanks for coming on.
Yeah, awesome to be on.
I also want to, did I say the last name correctly? I'm not a French speaker, and I assume you're not French, but it comes from some French root, right?
I don't think anyone has ever gotten my name exactly correctly on the first try, but if you got like 95% of the way there, which is perfect.
Okay, that makes me happy. So today, I think inevitably we're going to do L1s, L2s, but I think before we get started, Jon, I actually want to hear a bit of your thoughts on where you think we are. I know you mostly do VC, but I'm sure that you also have liquid market thoughts, so would love to hear kind of a take if you want to.
Yeah, sure. We do a little bit of both. I mean, like primarily the vast majority of our time is spent on just typical private venture investing, but we do hold liquid positions as well. I mean, particularly I would say our liquid positions end up looking like venture positions for the most part, where like they're multi-year hold kind of things that end up looking like similar underwriting for the most part. It's been interesting. I mean, I would say that particularly at least on the venture market, things have been slower in the past few months than I'd say like a year or so ago. But a lot of that isn't even a lower amount of quality deals, I would say. I would say it is just the 90+% of stuff that was just you're getting a new AI agent deck and whatever buzzword thing like every other day. Like most of that stuff has gone away. Because that stuff's just like not getting easy funding anymore. So it is a quieter market that I much prefer, where it is less deals, but I would say a higher percentage of deals that you're seeing are actually somewhat interesting. And then existing portfolio companies are just at important and interesting points where, either they're pivoting from a thing before, going into a new product, building out just like a more sustainable business that they did have. I mean, a lot of them are just like early stage. So it's been a fun time, I would say, on the private side, just like not the over hectic bull market where most of it is kind of garbage all the time. And then on liquid markets, I mean, like my honest answer is it's anyone's guess at this point what is going to happen in the next like few months or so. I mean, there is one person out there who could send out a tweet, tell you to buy, and like the market could just be up 30% tomorrow. He could also tell you to sell everything tomorrow, and then like the market would go down 30% tomorrow. And like in practice, that's the main practical short-term driver of all the liquid markets right now is just like what's going on with macro. And the fingers crossed, we'll see if we don't keep jinxing ourselves. Will Bitcoin like actually magically manage to decouple? It seems like we're finally getting away with that in the last week or so, where we didn't like completely shoot ourselves in the foot. Like maybe it's decoupling a little bit. So, I mean, if that trend continues to play out where people like actually do start to see Bitcoin as this kind of neutral safe haven, there will be some degree of positive effects from that to the rest of the alt space. But at the same time, it's not one-to-one the dollars flowing into Bitcoin and alts right now. I mean, you're seeing just more and more of that dispersion pretty steadily over the past few years, that Bitcoin and alts do trade quite differently at this point.
Yeah, I mean, on that note, you just kind of described this landscape where venture is slowing down a little bit, but is still active in the right ways. And Bitcoin's at 95K, which is kind of further evidence of exactly what you're talking about. This idea of decoupling. I'm kind of with you. Like, let's keep our fingers crossed for now. But nonetheless, we are at a pretty interesting point where markets are relatively calm. And yeah, again, Bitcoin's at 95K, which I don't think most people would have had on their bingo card, if you will.
Yeah.
Yeah, the sentiment just continues to not feel like it matches Bitcoin price, and that just that dispersion, that like disparity between those two has just been going up and up over the past year. Of like, you read crypto Twitter and then you look at the Bitcoin price, and they're just not the same thing anymore. Which tells you that more people should own Bitcoin.
The avid listener of this podcast is probably sick of me bringing up this one tweet, but there's the Gwart tweet from, I don't know, probably like 2 or 3 months ago now. That was like, yeah, I think Robinhood's going to come in and say thanks for building all your open source code. We're going to take that. We're going to build on top of it. And then so like that thing, that concept lurking in the back of everyone's mind, plus stablecoins really being like the hot ticket right now. I think that kind of plays into the poor sentiment. Like, you can't do anything on Twitter right now and not get yelled at, which that's like always kind of been the thing, but it feels really bad right now. I don't know. Crypto folks are like even getting dunked on by non-crypto people. Like, yeah, you don't talk to a crypto bro right now. And it's true. Like, I honestly I'm at like, being on Twitter is so negative EV right now, which is strange because that part I think is fairly new for me, at least personally.
Yeah, I would say I have started to realize that over the past few months, and I've been starting to use Twitter on and off less over the past couple months, because it's probably at the peak of where out of any point where I've been on Twitter, where since I've been in crypto, where I think it is providing the lowest value of just like reading through what's actually going on there, as far as like giving you an accurate sentiment of what's going on and what's interesting. Like, the signal is definitely degraded. Hopefully that returns and everyone is not just terribly pessimistic all the time at some point. But
where
yeah,
has
it's
your
not for most people.
I agree. And so I'm curious, where has that like, I used to check Twitter for that what's going on in the market thing right now, and I'm curious, like, where has that shifted to you? Like, where are you going to get that quick update on just what's happening in markets more broadly?
It's been tougher. I mean, as far as like sentiment of real things, that I mean, for markets, I just don't honestly care that much. It is just like not my day job or what I try to spend time on guessing. Is the ETH price or SOL price going to go up or down in the next week? I don't know. Like, we just don't day trade those things. Like, we take very long term positions. So as trying to figure out, what is happening with, I'd say, real projects, like what is actually happening on a longer term time horizon, it's shifted much more to just more direct and in-person kind of communication with people, which has thankfully, I mean, benefit of living in New York has also just gotten easier and easier over the past year or so. Thank you for bringing all of your conferences to New York this year. I'm very happy to go to them this year. Like, more of that trend has been happening, honestly, of more in-person events. I mean, there are more people coming to New York, I think, in part for that reason. More people who just like visit a few times a year, as opposed to this kind of just like scattered conference circuit. But yeah, it's like it's a lot more of just speaking to people directly, speaking to in person, because yeah, I mean, like, most of crypto Twitter is just like, it's just angry rambling at this point for the most part.
Yeah, I imagine projects start doing more formal letters and building out investor relations on their side. And I think most day traders have moved into Discord and Telegram, like small groups and chatting to each other as opposed to on Twitter. Dan, you brought up a Gwart tweet. I'm also going to bring up a Gwart tweet, specifically the one with Hasib. I don't know if you guys watched that pod. They did a 2-part pod. And one of the things that they chatted about was that VCs should not benchmark to Bitcoin. And this spurred up a lot of discussion on Twitter. I think liquid investors think that it should be benchmarked against BTC. I do see the point of having like a decorrelated asset. Like, it's a decorrelated market. It's completely different. You shouldn't focus on BTC returns. John, curious what you think.
So, just for context for me, I heard that this was a clip that got like soundbited from it. I listened to the first podcast of the two, where they fought more over like kind of value capture and how to think about tokens. I didn't listen to the second podcast, but understand the premise of the question. My general view is that I don't think a benchmark against BTC is a thing that makes sense. And I think what people like rightfully call out against that is like, oh, like, can you guys even beat Bitcoin on a risk adjusted basis? You know, blah, 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 like that, like all the conversation that follows from there. And I think it's like a totally valid point. And which is why I believe that Haseeb said this in the interview, like at least based on replies, is like why he and why also same for me is like, yeah, we tell LPs like if you want Bitcoin exposure, like you should go buy Bitcoin. Like I hold Bitcoin. That is the majority of the crypto that I hold in my PA is it's just Bitcoin. But these are just like fundamentally different markets at this point. Yeah, like if you want exposure to digital gold, macro asset, like all of these things, and uncertainty going ahead in the year, like you should buy Bitcoin. And I mean, it may also be sensible to have a manager do that for you. As part of a broader strategy, slash if they are, providing meaningful value on the timing of those and how to size those positions and think about that like could be value. But by and large, I mean, like I recommend to most people, like, yeah, if you want Bitcoin exposure, like you should buy Bitcoin. This is just exposure to a different market, like Bitcoin can go do its own thing. But if you want upside to what is stablecoin, like what are stablecoins going to do for the economy going forward? Like, is this going to revolutionize the way that like tech startups work? That's just a completely different exposure to you than does Bitcoin work as digital gold. Like it's very easy to see one of those theses playing out in full and the other one just completely going to zero and vice versa. They're just like different areas at this point. So yeah, I generally side on what I assume was Haseeb's point, which is what I kind of gathered from the replies of like they probably shouldn't be generally the benchmark. It's probably something like some basket of alts, which is I think a reasonable benchmark of like, are you beating a weighted average benchmark of ETH and Sol and BNB and like whatever and all of these other tokens? Like that is what I think that you're actually trying to get exposure to with kind of the venture investments.
Yeah, I think that makes sense. Okay, diving into some more maybe potentially technical things. I want to hear, since we also have Daniel Smith, I'm also going to include Solana in here, but John, some updated thoughts on Celestia, which I still don't understand the value proposition of, and that might be because I'm stupid, but and Solana, I like Solana, but just curious about how you think those are going to play out, and then maybe we can talk a bit about Ethereum, unfortunately,
yeah.
but
Mix of things. I mean, Solana's I'd say like the easy one. So I'll start there. This is one that I've been talking about for, I don't know, a couple years or whatever at this point. I think it like makes a ton of sense. They are currently the leader in like a single decentralized execution environment. I think that my base case is that continues to hold. I think that they are the best team building like the exact type of product that they are trying to build right now. They're really good at that. That continues, really easy to understand. The difficult part for underwriting something like Solana at this stage starts to become more in the question of, okay, what is the outcome that you really need to believe, and what am I underwriting to say that this thing is going to be worth $500 billion more? Which is like what you start to need to say if you're underwriting this on a venture outcome. And if you are underwriting it on anything other than a game of chicken of I think someone will buy it higher from me over the next few months, which is like it's a totally valid thesis, it's just a different thing. Sol is just getting to the stage, which has honestly been the largest drag on Ethereum over the last few years, which is it's just getting closer to being like it's a really big asset and it's really hard to move $100 billion asset. Like you are just talking about one of the bigger assets in the world at that point. So like, how do you justify that? And the fair point at this point, I think, is like that actually is still a fairly open risk of, if these things end up just continually converging toward a cash flow basis. No one really knows what the cash flows are going to look like at the end of the day for these things. I mean, like right now, Sol is generally priced on like an aggressive but defensible multiple of what you look at what like REV is, where it's a few $1 billion a year run rate, and it's priced at what, like 80 billion or something like that. It's aggressive, but like understandable multiple. But the practical point there is like, all right, well, I think that margins on what is actually getting a few $1 billion of revenue there are going to compress like 90+% over the next few years, because that's just like not a sustainable rate. Appsters are going to want to capture more of that. The market's going to get more efficient, et cetera. And so you're betting on, okay, well, I think that the market's going to grow, 10, 100x more in the next few years. And like the practical reality is we're just talking about orders of matter, like multiple orders of magnitude in both directions, where you're actually just completely guessing like where the scale of this is going to end up. Which is like a perfectly fair venture bet. You just want to bet on the thing that like I think is going to be the winner. Celestia is, I mean, like total opposite of that in many ways. Of obviously, it has like absolutely zero revenue today. It is, like worth like 30x less than Sol, and like I think that it should be. It should be worth a lot less than Sol. It's probably the simplest, purest venture bet, like in this kind of like liquid market category of what do I think is the thing that is going to be the best bet on, let's say the kind of like strong crypto hypothesis or whatever you want to call it, like works out over the next 5 years of, the world is just going to continue to hyper like financialize, more and more stuff is going to go on chain, AI agents or whatever going to be doing a gazillion transactions that it's impossible to reason about. One chain is obviously not enough. Like what is the single chain that is priced at like a reasonable point, where you think that like their architecture is the one that's probably going to be the opinionated one that will most likely benefit from that. I think Ethereum is just obviously out of the running in this kind of world of just like it's a simple numbers game. Like you could look at the math, like what is Ethereum trying to do on scale? Like these are like many orders of magnitude apart of like even the Ethereum like bull case of how much throughput they're going to do on blobs in a few years from now. Like it's nothing. Something like EigenDA is more of, it's actually just like a like sidecar DAC kind of service. It doesn't actually have a consensus itself. It's not trying to provide interop and like a full set of services. Like it fundamentally relies on something like Ethereum. Same thing for like Arbiter Many Trust. And then like the alternative is like all the extreme end of like bases doing the S3 bucket thing with like their centralized chains. And so like basically if you believe this world, we're like, all right, we're going to get it with a bunch of chains, and there's going to be some like reasonably coherent unified vision of someone that's going to benefit from that. I think Celestia is probably the best positioned on that. So it's not a like very simple underwritable cash flow bet of, I think that they're going to produce like 30% cash flow yield for the next few years. It's not that. It's very much my base case is like actually that this investment like probably doesn't work out on a multi-year basis. Like I think it's more likely that it goes to zero than it has the supreme bull case. Because that's what like most venture underwriting investments do look like, is like, I think more likely than not, your average position that you're taking if you're doing like a true venture underwriting outcome is probably not going to work out. But what is the weighted probability of this thing having that 100x versus what the market thinks it's going to do? And that's my like general framework on this. Is I think that they are by far the best positioned in like this kind of world out of really kind of any of the existing incumbents. And so if you're looking at, Celestia versus look at the other L1s, L2s, whatever, that are priced in that comparable range, whether it's like the major L2s or a lot of these alt L1s, which of these do you see as a much higher probability in 5 years from now? Like if we looked back and we're like, oh, this thing 100x, and like this was obviously the way to build all these things, this was the right opinionated architecture. I don't see any reasonable outcome where that happens for most of these other like kind of comparably priced L1s, L2s. Versus something like Celestia, that's like actually a very plausible outcome to me. I find like a very meaningful non-zero probability of that happening, because if this was the right architecture, like they're obviously the ones who are building it. So it's gotten to the point at this point where like, I mean, it's off like 90% or whatever from its highs, where it's gotten into the category where you can start to underwrite it again as a venture investment.
I think that makes sense. Daniel, unless you have something you want to ask or add, I'm gonna move on.
No, I thought both of those were really interesting theses, John. On the Solana piece, yeah, I think you hit the nail on the head. I think the thing that gets debated there is the sustainability of priority fees on an L1, the ability for there to always be contention, right? I think the app layer obviously wants to bring that contention to themselves, and even if you get something like application specific sequencing live, then that kind of alleviates some of that as well, right? Again, that's another way to pull those fees into their own revenue streams. So I guess like to concretely put it, like the counter thesis there is, yeah, you can survive off base fees if you 100x scale. So going from 1,000 TPS to 100,000 or 1 million TPS, obviously like the flag they have planted, if you will, is 1 million TPS. That seems like we need a lot of tech improvements to get there. But Anza has committed to a 2x before the year end, and we are in the end of April, which is pretty interesting. So CU block limits have increased from 48 to 50 already, and there's a feature flag in the current release to jump to 60. So honestly, making pretty solid progress there, and yeah, it's pretty interesting to kind of watch this play out, because I don't know. I think my base case is priority fees last longer than the market wants to give it credit for. The easy thing to point to, and this is certainly reasoning by analogy here, but everyone said the same thing about Coinbase fees, and I swear every time I make a trade, they only went higher. So I don't know. It's tough for me to really want to like buy into the we're going to fix everything. I think you need pretty solid censorship resistance before you're going to get anything like application specific sequencing to work. And it does feel like we're still a couple years out from that. But in that world, I definitely acknowledge that priority fees are probably not how you want to be generating the most of your REV.
Yeah. So many of these questions end up being just a really tricky timing question to really answer where is it going to end up. And I think this is a very strong tendency within crypto. I don't know if this is because of the prevalence of more academic and research types that and a lot of us think that way. But so many people very often just play things out to the extreme efficient outcome and say, okay, based on this, this is what's going to happen. And then completely ignore the fact that, okay, but that's going to take 10 or 15 years to work out, and markets are super inefficient, and you're going to miss all these multi-billion-dollar outcomes in the meantime. If everything ends up being a perfectly efficient market, well, honestly, proof of stake doesn't work, and most of the economics of most of these systems actually just completely don't work at all, and nobody makes any profit because profit should be competed away in a competitive market. All of these things don't work out. The thing is, it ends up being very difficult to assess, okay, where are we on that curve of how inefficient the market is versus we are going towards this outcome, and where the scale of outcome is going to be. That ends up being the tricky thing that you kind of need to figure out for most of these.
And then on the Celestia piece, do you think it's at odds in some way for a world, you play this out a decade, let's say, and let's say crypto works. Do you think Solana and Celestia can exist, or do you think it's kind of either or there?
Oh, I definitely think both of them can exist. Yeah. The difficult part ends up being trying to estimate, what percent of the world is a single execution environment kind of thing. Because it could totally be the case that Solana is even the biggest execution environment out there. This is the dominant permissionless smart contract platform. But if that ends up being, a small or meaningful, but nowhere near all of the market, well, then there's a gigantic market that is left there to be served by all of these other architectures. And, that long tail can be rather profitable if you're talking about a meaningful market. There's definitely a world where both of them can be successful long term.
Yeah, that makes sense. And then, okay, last thing on the priority fees part is obviously meme coin trading drives a significant portion of this, north of 80% probably across all chains, that's not really in a Solana specific thing. It's meme coins and arbitrage, and that's largely the only reason there's priority fees today. Do you think with the idea that everything will be tokenized and we're going to get Anthropic equity on chain, that I think Vlad Tenev has mentioned that a few times, or the idea of that more assets and more assets and more assets just come on chain, do you think that those will drive priority fees anywhere in the same capacity as meme coins, or will that almost look more like a barbell where you have these meme coin assets that trade in indexes that we know and see today versus you have these more let's call them regulated assets where they actually are on-chain equity. The SEC kind of put out another set of guidelines around what disclosure there would potentially look like, and then those probably trade through new ATSs that come online, and they can't interact in the same capacity as a lot of the more decentralized exchange type assets we see today. I'm curious if you thought all about that world and what that means for the on-chain finance system today.
Generally, I mean, my expectation is as you bring a lot more of these regulated financial assets on chain over a long time period, they should be able to produce a higher scale and more sustainable revenue. But that is going to take a serious scale. Because people are just not going to put Apple stock on chain and get sandwiched for 4% and just YOLOing it in a Telegram bot. That's just not going to happen. The only way you're going to make that up is by orders of magnitude more volume. And so my expectation is that's going to happen over time, but that is really going to take time. And so my general expectation of what's actually going to be driving the majority of fee capture for stuff like Solana, Hyperliquid, whatever in the short to medium term is going to be people like us just trading on chain. And I'm just going to go buy meme coins or do whatever on chain pretty quickly and just have fun with it. And those users are going to have a much higher willingness to pay higher fees. My guess is that's actually where most of the profit is going to be for a pretty meaningful amount of time. Hopefully in the long term, that's not the case because the other stuff hits such scale, but it's going to take quite a while.
I think that makes sense. In terms of Solana, do you think, I guess two questions. One is, do you think these the new SVM chains I think it's Eclipse, Fogo, and Atlas. Would they potentially pose an issue, or do you think that it's about network and not the execution environment? And the second thing is, Dan, this is kind of a jab at you. Firedancer only has 5% adoption across validators, and they gave 4% of tokens to jump for that. Do you think that's just going to increase, or is there a conversation to be had at some point about, was this useful?
Can I answer the second one first, since I just caught a stray here?
Yeah.
It's Frankendancer, and that is an intentional limit because it's not production ready, and they don't want
Okay.
all stake to be running on a new client. So
Okay.
Firedancer's
That's
not
a very
ready yet. It's not live yet. It's only on testnet. It's still using the Agave networking stack, and then they've rebuilt the other half of the client focused on execution. And so those are the two pieces that you kind of morph together, hence the name Frankendancer. So yeah, it's an intentional limit just for security and safety.
Okay, so my jab is not good.
Correct.
That's what SVM said.
Cool. So I'll take the other one then. So yeah, I mean, I think those are the three main SVM chains. There's the other one, like Bullet too, I know is building, like they're building a Solana rollup. Like they had an app, they had a purpose exchange that they're building into a rollup. Yeah, so I mean, we're investors in Eclipse. We own a bunch of Sol. Like we've been public about that for a long time. Yeah, my general view is at minimum, the two approaches are going to coexist for quite a while. General view is there is meaningful merit to both approaches. There's a good chance both of them just fully exist in the long term. And at minimum, I don't think anyone can tell you with a straight face with 100% confidence like which one is like actually going to be the right end game architecture for all these long term, and like how's the market actually going to play out. Broadly, I would say that pretty much covers the full spectrum between all of those, of what is the right degree of kind of permissioning and architecture to get the right type of features that we care about for users. In general, I mean, like, this is a broad trend that I've talked about for a number of years. I think the L1 versus L2 thing is BS. Like it doesn't matter rollups or L1s, they're L2s. It's all the same thing. These chains are execution layers. That's the practical difference that matters of them versus like a Celestia or a rollup base layer or whatever. They're all execution layers. They're all competing with the same apps, the same users, same kind of things for like broad brushstrokes. What ends up mattering between them is what are the architectural changes that you make on this kind of like modular versus integrated spectrum very broadly, of what degree of kind of permissioning and technical choices do you make on the operators of this to provide certain features, is what I'm saying. And so like going concretely into that, in general, what you see most of these kind of like roll-up-y type architectures do is, all right, we're going to post all the data on this, this other big decentralized data layer, Celestia, whatever, pick the Ethereum, pick your data layer. And as a result of that, that lets us take a like, short-term security trade-off basically of, all right, we're going to have this like just solo permission sequencer where, hey, like even if we screw up, where our sequencer is located in Spain and sorry, the power is off for the next few days, like, don't worry, you got your fallback. Like, everything's going to work fine. You just like, you wait a few seconds and got the fallback path. Like everything works fine. You get your money out. Everything's verifiable, blah, blah, blah. As a result of that, you get to lean into a very permissioned and tighter control over your real-time guarantees, which is actually the thing that primarily dictates like user experience and a lot of these other things. So concretely, what it makes it easy to do. One of them is just like literally IPRL, like even more than a decentralized chain, makes it super easy. I just can beef the hell out of my box. I'm gonna have a really big box. I'm gonna do even higher throughput than your decentralized consensus, and I'm gonna do even lower latency because like screw the leader rotation and all this. Like one box, just instant confirmations. I'm just gonna give out stream of confirmations. That makes it super easy. And then the other part I would say is like broadly over kind of like transaction control and ordering, basically MEV management, where again, it makes it super easy to be like, hey, trader, like you don't like getting sandwiched on Solana, come to my chain. Don't worry, like everything's private, first come, first serve, like you're not going to get sandwiched. It lets you do things like verifiable ordering, which make it really easy to do MEV redistribution. That is a more difficult thing to do on a permissionless chain that these chains will increasingly need to compete on over time. Is like, hey, your app on Solana is like leaking all this MEV to those to the Sol holders, to the stakers. Like, come deploy here. We have this permission staker that like does this verifiable ordering rule. Based on this, we could see the priority fees that are being paid for your application. We return all that value to you. Great, your margins just went up now a bunch. Like, come deploy here because like we're going to help you out with that. Like those are meaningful things that these chains are going to be able to compete against these kind of like big permissionless L1s on. I would also say that like there's that kind of middle area of like Fogo fits this, and like I mean on the more like EVM or like just general app side, Hyperliquid fits this of saying like, we're gonna do the permission thing, but like we're not even gonna bother with the rollup thing. We're just gonna get 15, 20 validators, whatever. We're just gonna keep them permissioned and like hope we can trust them and like hope it works. Hyperliquid, it's also different because like I don't know, like one party owns like a very large super majority of stake anyway. So like I don't know, number of validators, how useful that is. But broadly, like you're going to be able to compete on these different features of like broadly IBRL even more and offer better UX around like transaction ordering control. We could do things like prioritize cancels. Like this is a thing that Hyperliquid does at a permission environment. You can't really just like do that very easily in a permissionless environment because it's not incentive compatible. And so these are important things. And I think that you will need to compete on these fronts over time. And so the question is going to be, can the L1s actually compete on these things over time? Or is it going to be, you strictly like, you need a permission party that like, we trust this guy to run the box and they're going to do it for us. Like Coinbase isn't going to front run me. I trust them to run the sequencer. On the IBRL side, I mean, like basically what this comes down to is, one is this an important feature? Because it's not a user-facing thing. Like a user doesn't care if they have 1 millisecond latency or 100 milliseconds. Like they can't tell the difference. The question is this important for market structure? Basically, like does this like end up produce better spreads because this is better for market makers, better for HFT firms that ends up providing better spreads for users, which is possible. Like people will argue like how important that is, or if you just should have fast batching in auctions. But let's say it is valuable. Can an L1 compete on this? What this basically ends up looking is like some form of transaction streaming service. And I mean, Solana, this is like literally what shreds are, where the block producer, the current leader, is like you're streaming out shreds in real time as you're kind of constructing the block. You're not actually just sending out a discrete chunk every 400 milliseconds. And another side, like on Monad, you could have the current leader like could do pre-confirmations effectively, where it's the same exact idea, like you're streaming out throughout. I mean, like we're invested in Monad. We're also invested in Fastlane, which is basically Jito for Monad, more or less. Like this is one of the things that they intend to build, in addition to like the MEV auctions and stuff, is like this kind of pre-conf sidecar, where it's the same idea. You're streaming out the pre-confirmations, and so the question there ends up becoming like in these like kind of more integrated decentralized consensus architectures, does that decentralized pre-conf architecture work as well as like, hey, we just gave one party a permanent write lock on the state and they give you confirmations? Or is this like really hard to do because, I don't know, some of the validators don't opt into this service because streaming continuous block production as in shreds is like not necessarily actually incentive compatible. Maybe people decide not to do this. Slash, you're doing leader rotation and like a couple % of the time a block gets dropped. And so this is the less reliable guarantee for apps to get state updates. Is that like a good enough? If it's, it's 98% of the time, does it need to be 99, 99.9? We don't really know. So broadly on both of these, like there are these very clear areas where this additional permissioning of these environments is going to be a product advantage for them today. Yep. Is that going to be able to overcome, the high network effects, something like Solana today? Slash, will Solana be able to introduce these kind of things and Monad and these other chains over time, such that they can compete with the L2, such that there isn't really a trade-off? That ends up being the tough question. Is like how important are these features? And on what time horizon can you kind of adjust them in the different architectures?
Yeah, I'm glad you brought up Fogo and Hyperliquid being kind of similar, because I think they're the two examples of having a limited validator set and having some form of decentralization, despite the Hyperliquid team, like you said, having a vast majority of the foundation, having vast majority of the stake. I think that's probably what we've seen. But we've seen this for a while. Like people said Solana wasn't decentralized, and clearly like it benefited off of it compared to Ethereum. What's up, guys? Today we're joined by Antonio from dYdX. Antonio, thank you so much for coming on again.
Thank you for having me.
Something that I wanted to ask about is offering more markets, maybe not spot, but in terms of, I guess, real world assets or anything that is being traded on, not crypto, not tokens. Is that something that you guys are interested in?
Yeah, it certainly is. And there's considerations overall here in terms of what can be traded on the platform, and like just from a kind of legal perspective. But overall, it's something that we're very supportive of. And the cool thing about dYdX is it's really the users that are in control, right? And now we have this thing called permissionless market listings, and there's still work to be done in terms of adding more types of things that can be added using permissionless markets. But after that, it's really up to the users to add these things. So, and I think it's kind of the cool thing about this permissionless market listings, and this isn't necessarily like a novel feature within DeFi. Like this is literally what every DeFi platform has made their buck on, from Uniswap to a pump fund. It's just like, come to the platform and tell us what you want to trade. The cool thing is it's never existed in perps before, and that's where dYdX comes in. So I think it's really our job just to enable the most types of things to be able to be traded on dYdX, and then it's the user's job to add those things and trade what they want to trade.
In terms of, I think I asked you this last time as well, but I want to get your opinion again because we've had a lot of things change. In terms of how DeFi has changed and how crypto has changed, with regard to regulation, with regard to institutional adoption, how are you guys thinking about this at dYdX? Is this something that's worrying because regulation might be more in favor for, I guess, centralized exchanges, or is this something that you guys think legitimizes dYdX and puts it at the forefront?
Yeah, I would say much more on the legitimizes side, and this is not a particularly hot take given what's been going on recently, but obviously there's been a much more permissive stance towards crypto generally, especially in the US recently. And I think that's amazing. And this is something that all of us have been working hard on for a while from a policy perspective. And congratulate a lot of the efforts to some of the great people in the space for making a lot of this happen. And I think it's something that just really sets us up well in the long term, for two reasons. First of all, just because it makes it a heck of a lot easier and a heck of a lot more clear to build in DeFi going forwards. And then second of all, because like, yeah, I mean, I don't know if it's true, but I think dYdX is basically the only perps DEX that's actually based in the US. Like I'm sitting in New York right now. And so that's great for us, even from a competitive dynamics perspective, just because, you know, and I really think we have taken regulation seriously forever. And I think we've done a great job of treading this uncertainty in a way that's always felt safe from a legal perspective. But now it just lets us be more aggressive because there's more clarity and it shows you what the lines are. And that's something that's just going to allow us to go out and be able to compete. And like, yeah, I won't go into all the details, but obviously there's been certain things that overseas competitors have been able to do from a regulatory perspective, or maybe more clearly, like have felt comfortable doing from a regulatory perspective, that we haven't felt as comfortable doing. And I think those things will normalize because of this.
That makes sense. One thing I wanted to ask is, I think the most, I guess, obvious comparison of what you mentioned, like the L2s versus the L1s, and how if the L1s are going to be able to catch up, is probably Monad versus MegaETH, not MegaETH. I'm curious if you have thoughts on, because Monad is not, I think it's kind of difficult for people to understand that Monad is like a full software and hardware job. It's not like they're not trying to just mix one or the other and go to market. It's like a full buildup of the stack. Versus MegaETH, like they might actually suffer from that thing you mentioned where 1 millisecond versus 100 milliseconds, it doesn't matter. Curious if you have any thoughts on how that will shape out. Obviously, we're going to see, like you said, it's going to take like 3-4 years, but any thoughts?
Yeah, I mean, I would say it's also a particularly hard one to tell, just because I mean, neither of them are live on mainnet right now. Both of them are on testnet, so it makes it like even harder to like actually predict anything for either of them. But in general, yeah, I mean, the world where if MegaETH is going to do well is most likely would be the world where it ends up being super important that ultra low latency was important for whatever handful of applications. It's better for market makers to trickle down to users, et cetera. And you weren't able to reproduce that as well on an L1. In absence of that, my guess is that Monad is better positioned. I mean, part of that is just like it's a sentiment guess of where do you think like applications and good teams are going to go. Like they're both on testnet. You're like sort of flipping a coin here, honestly. but yeah, I mean, it's an architecture that like obviously makes sense of like they have optimized the hell out of the EVM. Like I think that they are the best team that is just working on fundamental EVM optimizations and like making the best chain in reflection of that. And so yeah, the main disadvantage would be that world of if it ends up being that like this ultra low latency difference ended up being super important and like you just weren't able to get there for whatever reason on Monad. I don't think that's going to happen. I think that you're going to be able to build those things. / it's already alleviated by like other designs. But we'll see. Because that, I mean, very literally just to describe for anyone who doesn't know, like this is what MegaETH does, is they have this notion of like every 1 second if they have what are called EVM blocks, which is like that's a traditional EVM compatible, works with all the apps, et cetera, like notion of a typical block. And then they send out these 10 millisecond like mini block confirmations, which is just supposed to be like a lighter confirmation from the sequencer that like, hey, this thing is going to get included. And so if that ends up being super valuable, like that would kind of be the edge. But yeah, I mean, like you see the Monad guys, like obviously arguing with them of like, one, I think that like these differences are either addressed by like current architectures / it's not that important for HFTs / we can just give pre-comps as an L1 leader. And it's also much easier for Monad to give pre-comps versus something like Ethereum for a variety of like architectural consensus reasons, smaller validator set, starting from the beginning, et cetera, that you can kind of build around and customize it.
Yeah, the mini block, big block system is interesting. The Hyperliquid also has something similar. I'm not sure if it's going to be very useful, but it does make sense to have 2 different blocks for 2 different types of users. One more thing that you mentioned was the L1 versus the L2 and how it's not going to matter, and they're both just chains. I agree on the premise completely, and I fought with multiple people on this, I still think that an L1 premium exists. I think it's getting compressed, but I think it still exists to an extent. I have been proven wrong by the recent initial launch, but I am still hopeful that I'm not wrong. Curious if you agree that it still exists, or if you think it's stupid and I'm wrong.
I think it exists, but it's also stupid. But I like that happens all the time in crypto. So those are not different things. Yeah, so I think it does still exist to some extent, and I would say that for a variety of reasons. One is I don't actually think it's that big. I mean, it's really hard to put like exact valuation multiples on like for like chains in crypto. The one that I've seen for this is like if you look at REV multiples on L1s versus L2s, they actually generally are in the same relative ballpark. They're not like that different. In general, I do think an L1 premium still exists for the most part. I mean, part of that is just if you look at the big chains, there's a lot of chance in there of one is just path dependence of like most of the early chains, they were all L1s. So, I mean, like obviously the big existing incumbents are L1s and, you know, you kind of just look to those and be like, oh, L1s are valuable. And then you have the just like idiosyncratic quirk, I would say, of by far the most successful L2 just doesn't have a token. It's Base. Like if Base launched a token and it was like actually a real Base token, what would that be worth? Like, I don't know, go look at the leaderboard. It'd be very high up there. It would be one of the most valuable tokens without a doubt. So part of it's just that. It's just kind of like weird, a mix of path dependence and idiosyncratic, like what chains have tokens and how long have they been around for. I mean, some of it is probably the just like irrational, the market still, you know, I don't know, L1 sounds cooler, it sounds more valuable, like whatever, that kind of part of it. I think that is the part of it that just like continues to go away. And then the last part, which I think is the important point, which like actually gets to the difference between a lot of these L1s and L2s in practice and should lead you to a valuation discount, is the technical architecture differences between what people call an L1 versus an L2 makes absolutely no difference to a user or to what you should value a chain. It doesn't matter if my chain has this like special bridge to another chain and like I post a state root there and a proof. Like it doesn't, like Solana wouldn't be less valuable if you made a bridge from Solana to Ethereum that says like, oh, I follow the Ethereum chain and like so we quote unquote like settle there and you could in theory call this thing an L2. Same thing happens for like any chain. Like if you get rid of a bridge there, like does that make the chain fundamentally more valuable? Like no, it doesn't. What it actually gets to in practice is that most of these chains that are these so-called L2s, particularly the early on ones, were actually fundamentally trying to in practice act as an extension of the layer one. They were saying like, hey, like very literally, usually Ethereum, it's very slow, it's really expensive, it kind of sucks to use. So, hey, you users over there, like come to our chain, bring your ETH over, bring your stable coins over, the stuff that you literally have on the L1. We're going to deploy the same exact apps. Like, please come play over here, and we're going to make it look like Ethereum for you. In that world, it obviously makes sense that you should be discounting the valuations of these things and thinking about what their upside market is, because very fundamentally, they are trying to act as an extension and a smaller piece of a larger ecosystem. They are not like generating their own users, the unique state, and owning that. They're trying to be a pretty fungible extension of this kind of like layer one that like actually owns the users and the state and the valuable stuff, versus a layer one in the like practical sense. Something like Solana is generally saying, hey, no, like we are going to introduce and create all of the valuable unique state here. Like we're going to get our own users onboarded. All the cool new applications are here. All the cool new tokens are going to launch here. And in that world, it makes sense that you assess there's a higher market value of this thing because they actually own the network effects and they have a much larger potential investment outcome. What I think that you're starting to see is these L2s are slowly starting to gravitate in that direction. You know, Base is obviously trying to like move more and more in the direction of like honestly being like less of a, hey, ETH user, just like bring your money over, versus like we want to be onboarding new users, bringing in new people, bringing in new assets, bring everything on chain. And like in that world, does it make a difference to Base's like valuation if they did have a token that like, hey, we post some stuff to Ethereum? Like, no, this is just a simple service provider relationship in the background. So that ends up being the really important point. Is the technical differences of L1 versus L2 make absolutely no difference. This is just like a background service provider agreement, basically. The practical difference of whether a chain is really an L1 versus an L2, and this kind of like sovereignty value capture point that matters is, do you actually own the state? Do you own the users yourself? Are you trying to like actually build this kind of ecosystem of your own, or are you just trying to like piggyback off of someone else and just like capture a little piece of their pie? Because those end up being very obviously different kind of investment evaluations of those two.
That makes sense. Daniel, anything you want to add?
Yeah, I want to talk about ETH L1 scaling. I think all the listeners are familiar with your thoughts on the matter, but within 24 hours ago, Donkrad just posted a forum post about I haven't read it full context. Again, this was very recent, but the idea is to exponentially scale Ethereum's L1 execution by increasing the gas limit 10x in 2 years and 100x in 4 years. Would love to get your take on the matter there from a high level, and then kind of want to dive into what this like actually means in practice.
Yeah. So, I mean, unsurprising, I absolutely love it. I had tweeted back in, I think it was like December or something, when it was when everything was, it was sort of at the peak of people were getting towards, all right, we're going to do this gas increase bump from 30 to 36 million, which ended up getting through. It was a mess of a process. People like this sat on the back burner for like 3 or 4 years. And then when we finally like started to muster up the like excitement to do something, even that ended up taking like 6 months to a year. I think it actually took over a year from when Vitalik said, like, even he said, like, we should do this. People seriously considered like, hey, should we just, maybe we push this until after Pectra to like not mess with anything. And so I tweeted it back in December. I was like, this just shouldn't be a thing. If we agree that we want to increase the gas limit, like this ad hoc process, like just absolutely makes no sense. You need to just like set a schedule, and that should be the default. The default is, hey, we haven't changed this thing in years. We are clearly have like an overabundance of resources. You could increase this a pretty meaningful amount. And then over these upcoming years, bandwidth is going to prove at some predictable rate. Just like hardware in general is going to just get better at some predictable rate. It gets easier to run a node. You should be base case increasing all of your resource limits and just scaling with like the way that like hardware and bandwidth and all of these things improve over time. So I tweeted that out. And then I remember Jesse had replied, like, yeah, we're doing this with Base. We did it at the beginning of the year. We have this linear increase now where like, every week it goes up by 1 megagas per second or whatever it was. And I remember Duncan replied to that one, exponential would be better. And fast forward a few months, that is exactly what this proposal is. It is saying like, hey, we should probably have this kind of default where the Ethereum gas limit is literally just set by validators voting on a block by block basis. If I propose the next block as a validator, I can vote to just like change the gas limit. I can create a different size block. And if you have the majority of stake weight that's doing this, the validators just effectively set the gas limit themselves. The problem is like people need to coordinate and agree on this thing. And so it's like, hey, why don't we just have everyone have this kind of default programmatic curve of, you just should be exponentially increasing the gas limit. over time. And like, we can obviously deviate from this, you know, if we have other considerations, other upgrades, things that didn't improve as well as we thought they were going to, blah, blah, blah. But the base case should be, we are just improving with the way that like everything in the world improves. It gets easier to run a node. Like, that is what you should be doing. And so people can argue over in the numbers here. I mean, this one ended up being, it was on the aggressive side. It was like 100x over 4 years is what it would get you, which like I think is awesome. But like, even if those are not the right numbers, the important point was like, you're trying to send a clear market signal of, hey, we are serious about this thing. You know, come back to the L1. Like, we are going to keep scaling this. And that was a meaningful part of why I at least wanted to do the little bump last year. It was all right. You haven't done this in like 3 or 4 years. No, it doesn't make a difference if the gas limit is actually 30 or 36 million. It matters that you're telling the market like, hey, we're committing to doing this thing, and there's gonna be more coming. And this is just the perfect continuation of that. Of like, hey, if you're serious about scaling the L1 and we want apps to come here, you know, we were busy telling all of them like, get the hell off the L1, go onto L2 for the past few years. And this is finally sending a credible signal. Like, no, like the base case is we're going to keep getting better. Please come build here. Like, we're open for business again, which was great.
Yeah, strong agree on the sending a message piece. But where I'm like, okay, so then the next question is, well, how much throughput is enough or the right amount to have on the L1? In terms of like the fact of the practical realities that it hasn't been prioritized over this number of years, and home stakers are still on the network, et cetera, et cetera. So right now, Ethereum runs at about like 1.5 mgas per second, or about like 14 TPS. A 2x in 2 years doesn't really move the needle in terms of like what's in the market today, right? You brought up the basis scaling plan, and right now they're at 30 mgas per second. So a 2x would still leave you, you know, roughly 15x behind base today, and base is on a path to, I think their plan was 100 million, 100 mgas per second by the end of the year. So, you know, that's their direction, and then Ethereum would get there meaningfully over about 4 years. Like, at what point, I guess, does the scales tip back in the direction of being like, okay, like, yes, Ethereum will be, you know, have less total transaction volume than most other high throughput chains we see today, but it's enough to actually facilitate the fact that it a meaningful amount of activity on the L1, considering it does have the most stable coins, it does have the most EVL. Every major EVM app is deployed there. It does have like a lot of very, very strong roots that it feels like there could be a very quick rebound, all things considered, in terms of activity. But yeah, I'm curious, like, where is there enough supply to kind of, you know, I hate the phrase, but induce enough demand for there to be meaningful activity again?
Yeah. So I mean, quick on the numbers. I think if I remember correctly, I think Base was even more aggressive. I think they wanted to do a 10x to 250 megagas per second by the end of the year, and we'll see if it got there. But yeah, I mean, like literally orders of magnitude apart is the clear point. I mean, that gets to why it's very obvious that I think if any new chain was trying this today, this is DOA. Like, this is a joke. These numbers are so small, none of this matters. Ethereum is the only place that like this might work, because you still just have so much capital sitting there, and it is still the default. Like, all of the integrations are there. You just make this the easy place again of like, all right, I'm launching a token, or I'm doing whatever broad ecosystem thing that like I want a bunch of people to go participate in it, like stuff like that, like Kaido launching their token or whatever. Like, but why should that happen on Base? If the L1 can facilitate that, like, just do that there. Like, MegaETH did their fluffle NFT thing, because like they don't have their chain yet. Like, they did it on the L1, and that was a mess. Could have been actually much worse, but like not ideal to do it there. You want to make that good again, you know, like these big NFT mints, token launches, whatever. Like, that should just be the default place where you can do at least this kind of stuff. And so it ends up being a mix of, you have a lot of existing just assets and users and all those things who you can get them to use DeFi. DeFi is going to keep growing. You want, you know, you're trying to get the BlackRock Biddle stuff on chain, you know, get the serious stuff to come there. Realistically, a lot of that just follows like, where are normie users putting their money? Like, what are people using? And then the ongoing stuff, those unpredictable, like when a new token launches, when a project does a big NFT mint or whatever, like, we should be the default place where you get to do those things. And that's how you bring on like new users. So there's always going to be new stuff that's happening over time. Like, people are going to be willing to use the L1 as long as it's like decent enough to use. And so there's never a black and white number, which is what like that's probably the question that I always get asked the most in relation to the Ethereum scaling stuff, which is like a super unsatisfying answer of like, okay, but how much is enough? Like, how much do we need to increase the gas or reduce the block times for this to be good enough? And I'm like, I don't have an answer. this is a sliding scale, but like in general, more IBRL is better and will probably get you more applications. And like, honestly, there isn't really downside to this stuff. Like, we clearly have capacity to increase these requirements and just optimize a lot more. Like, there's so much low hanging fruit on how to improve the L1 of just much better gas pricing costs on a lot of operations that honestly just get you a lot of headroom. Delay the state route. There's all these different things that you can do that you should just do them. And does it versus the base case end up in a 2x in demand or a 5x in demand or 30% increase in demand? I don't know. But I would be shocked if it's not more, and like a meaningfully positive amount more that it was worth doing in hindsight. Like, so much of it is going to be unpredictable what kind of stuff you're getting forward. But my general intuition is it's like it will make a meaningful dent and you'll get real stuff to stay there.
Yeah, definitely heard on the no brainer, right? Let's do this immediately type thing. I've been following Storm for quite a long time, but he's been really loud in the space about making this happen. Storm from Paradigm, and they set up like a performance test net meant to basically battle test a lot of these ideas. They've been posting some of their early results and look great. He actually had just an interesting tweet while we're on Ethereum just now. I guess there was a core dev call. This looks like, just 20 minutes ago that just wrapped up. And he said, big update. EOF is probably dead due to lack of rough consensus being reached on the core dev call. This is a massive milestone and symbolic of Ethereum turning a new page and evolving towards a maximal consideration of user impact. There will still be growing pains with some explicit statements heard on the call. On this issue, we should only listen to core devs and not users. We should ship EOF just to respect the process and many versions of the sunk cost fallacy. So I'm kind of curious from your end, like EOF, I guess for the audience, that's a very simplified version of what EOF was basically changing the transaction format to, depending on who you ask, either improve or worsen the developer experience. And so it was debated for 4 years. The initial post was in November of 2021 and had a very long process of maybe we do this, maybe we don't do this. And then sort of seems like at the final buzzer here, the verdict was to go the other way. So from the outside looking in, it feels probably like this was the right move. You're going to waste a lot of developer resources on something that just doesn't impact most users. But from the inside, it kind of seems like the consensus attitude or thoughts on the matter was, we already did waste a lot of resources to get here. And now we're just going to kind of call it dead in the water now. I'm curious if you have a take on this, or honestly, to Storm's point, like sort of what this means around the culture of Ethereum actually shifting to wanting to improve the L1 and focus on things that actually do move the needle rather than more of the academic, more science project type things.
So first, I'll put as an almost disclaimer, but like I think like actually a somewhat important part of the answer is I understand EOF and the implications of it far less than I should. And for any like comparable level of people have talked about this a lot in Ethereum. And it's for the very simple reason of when I've like asked about it and looked at it in the past over the past year or two, is like I would look at it and like understand at a high level what it is. And like I would ask people like, okay, but like why are you doing this? Like what's the reason? Like what's the benefit of this? Like, why is this good for users? What do you get out of this? I just like never got any simple literal answer of like, here's why we're doing this. Why it's for users. I just fully ignored it, basically, honestly, after that, as a result over the past year. Because like, all right, like it doesn't seem like this thing actually matters. Whatever, if they want to go do it, like it doesn't seem like a good priority to me. And so it seems that we have to like come full circle around to that. I'm happy I didn't spend a lot of time wasted on it, because that's exactly what the conclusion has ended up being, is people realize like, okay, but why are we doing this? Like, it sounds nice, but do we actually get anything out of it that's important? Like, is this good for users or in any way? Or are like, once again, all of the users telling us just like, hey, I don't want to like sign twice for transactions and I want like cheaper and faster transactions? Because I think they're like pretty much just telling you stuff like the latter one. Like, let's go do the things that like actually get us that. And so we're finally moving in that direction where like UX improvements and scalability are like actually the things to prioritize. So I think it's great that finally, like, yeah, we should just focus on the simple things. Like, we should just scale the L1. Like, if you can't explain this to a user and like none of them care, like it's probably not the most important thing to prioritize right now. So it's good to see that we've just like come to that more pragmatic outcome. Because yeah, I think it's incredibly silly to be like, I saw some arguments of, oh, we should do this at this point because we've talked about it for a long time and like the devs did a lot of work, and we don't want to send a message that like, oh, if you do a lot of work on Ethereum, that like your things don't get in. I think that's crazy. Like, you should just make Ethereum what you think is a good thing to make. If we don't decide that this is an important thing as a community, like you just shouldn't do it. So sounds like a not surprising outcome after everything I've seen on Twitter in the past week, but a outcome that I am happy with.
Yeah, I think it really just marks the shifting of the tides and a refocusing of priorities, right? I think the new EF, Donkrad posting the forum post about scaling the L1 and then EOF failing is like, all right, I think there's like actually reason to believe outside of just like, oh yeah, someone finally did something. Like, I don't know. I listened to the Bankless podcast. I was really hoping that would be my moment of like, all right, we're back, baby. But I don't know. There was too many comments around like, even just hearing like them walk through the process of, oh yeah, the first thing Tomas did when he came into the EF was just make connections between different people within the EF, and was like, you guys weren't talking to each other, which like, I don't know. I've gone on a rant about this before, but I don't know. It feels like there's sensible heads that are trying to prevail, and then we're actually seeing the results of that, right? With again those three things happening. So I'm getting excited again.
Yeah, we're definitely at that stage. And you could tell that was, I mean, Donkrod's very kind of like sober and pragmatic answer. Remember in that Bankless podcast of when they asked, how are things going right now? Basically, kind of how do you rate yourself? How's the progress going? And it was like, yeah, I mean, I think that people are saying a lot of the right things now, but we need to prove it. Like we haven't actually done anything concrete to prove it. And this is looking like the early stages of, okay, real actions are changing in reflection of this. I mean, this is like 1% of the way you want to see them actually do all of the scaling over the next few years and all these different things. But you're starting to finally see very literal practical things of the protocol is going to change in reflection of this attitude shift in Ethereum over the past 6 months. Like this is not an outcome that would have happened 6 months ago that like, any IP for increasing the gas limit continuously is being seriously considered and EOF is dead. Like that is a direct result of the vibe shift. And we need to see just like 100x more things like that, where actual protocol changes are being made in reflection of all this.
Can I say something? We're very optimistic, and I also get very optimistic about Ethereum because I love it. I always have I think the ETH BTC chart is like just me always getting that moment of saying, yeah, things might turn around, and then it keeps going down. I imagine a lot of people feel that way. It's the first time I've heard Daniel Smith optimistic about Ethereum, maybe in like 2 years now. Do you guys actually think this? I guess it's good when Dankrad's posting it, but do you see there being this having like actual legs as opposed? Because I remember, and I might be mistaken, but I remember there being some form of IBRL improvements being proposed. Although I guess it's very different now because the EOF's dead and there's a clear shift. Or do you see there being legs is the main question, I guess.
I definitely think it's very meaningfully different than it was in the past. I will still give my like realist level of take, which is what I've also tweeted over the past few days and annoyed people, is like, hey, like I'm really positive on the vibe shift and all these things is going in the right direction. But if I'm being very literal, to be clear, like I literally don't own any ETH, like still like that. So that should be like some level setting of the answer of there is still a difference between, hey, I think things are moving in the right direction. All of this stuff is great. And like, hey, do these changes still justify a $200+ billion asset that's going to go to $1 trillion? Like those are just different levels of questions. And I think that latter one is a really, really, really hard question to answer. And I don't think it's at quite that level yet. But at the same time, I'm like happy to like very like genuinely happy to like see the shift and acknowledge of, hey, this is a much better vibe shift and attitude than I have seen at any point over the past few years. Like this is a real change. I am hopeful that this ends up producing literal protocol changes, but at the same time, trying to temper expectations of, okay, how much does the protocol actually change based on everything that I've seen in Ethereum over the past few years? It's really hard to change things. Everything always takes a lot longer than you want it to. It ends up being a little smaller than you wanted it to. So, I mean, we are at least setting the expectations really high with 100x over 4 years. That's a good starting point of the negotiations. Hopefully we get like a fraction of the way there. That would be great. But yeah, there's still a big level of, justifying like, do I think Ethereum is going to look like Solana tomorrow? Like, no, that's not going to happen. But at the same time, I think this is the best outcome you could hope for at this stage, given where, Ethereum has been over the past couple of years or so.
Yeah, I agree completely, John. And Boccaccio, yes, it is one of the first times I've been super optimistic because something actually feels like it's changing. And again, in our morning call, maybe a week ago, whenever that Bankless pod came out, I still wasn't that optimistic. But again, now it feels like we actually see some things going from words to action, which means a lot. But like, I guess they went from spoken words to written words in meaningful places, right? EOF actually dying and there being a scaling forum post is very, very, it's an important start. But we need to actually put those things into practice, as you mentioned, John. And then on ETH BTC specifically, like, look, Bitcoin got anointed by the most important economy in the world. Like, that was the thing it needed to do for it to see success, right? It had small countries on board. It had small corporations on board, relatively speaking. But that was sort of like the next chapter. And I was kind of bearish on that happening, but it happened. And you cannot like ignore the gravity or the importance of that thing happening. So yeah, I think Bitcoin's going to just keep eating basically everything in every chart when you plot it against it. And I think that's like less of a reflection of, the rest of crypto being bad, but more so of how excellent Bitcoin is performing, and that the pillars it is now knocking down are monsters, right? Like I was bearish on this happening. And John, me and Mike did a podcast. I think it was actually when we did the REV one, and like still a fee truther, always going to be a Bitcoin fee truther. But it's actually getting to that point where it's like, okay, shit, like if every economy and every country does own this thing, like, okay, there's now that the whole mining at a loss thing becomes real, because there are parties that own the asset that would be interested in doing this. So I think Bitcoin's just honestly on a warpath right now.
Yeah.
And yeah, you plot that against any equity, you're going to see a similar chart as well. So I think that's just like a difference. And so, yeah, in the Hasib versus Gwart debate, like, yeah, I just think it is a weird benchmark, because it doesn't matter what you plot it against, right? You plot a lot of hedge funds against that, they're probably down as well. Like, I don't know. It's just the state of how great Bitcoin is as an asset right now. But yeah, that's kind of my thoughts. And I guess more concretely on the Ethereum stuff real quick is, my biggest concern is from like the Ethereum perspective is, okay, like we want a 2x over we want a 10x over 2 years, which is a great start. But again, that gets you from, I don't know, speaking loosely in TPS terms, it doesn't scale perfectly, but we'll pretend it does. It's going from like 14 TPS today to like 140 TPS in 2 years, when Solana wants to go 2x this year from 1,000 to 2,000. So that's kind of like, it's still like there is a large gap. So the question of how much is enough, I think, is super, super important. And I honestly think that curve kind of like dips before it picks back up, right? If you just like went from 14 TPS to 50, I don't think you're going to convince the marginal app to come back to your chain. And then therefore transactions will probably be cheaper. REV will probably decrease. But then if you can jump from 50 to 100 to 150 to 200, then I think that curve really starts screaming back up again. So it's going to be really interesting to watch that in practice, but that's probably like my one big caution. But again, like this is what needs to happen.
Yeah, completely agree. And on the kind of just like world point of like these just are different assets. I mean, very literally we sold all the last of our ETH and rotate all of it into Bitcoin in that day around the election for that very simple reason of there is still a very like large contingent of the market that believes like ETH is still this special thing that can compete with Bitcoin, and felt pretty confident at that point. Once you get a very clear signal from like literally the largest, most powerful country in the world that no, hey, Bitcoin is the special one. This is just like these are not the same thing. These are just fundamentally different categories. One is this going to be completely different, digital gold, macro asset, and then hey, all of you guys can go fight out tech platforms. That's just a completely different market there. And so that is, I would say, like broadly, a lot of the re-rating that obviously Ethereum has had over the past few years is people are realizing Bitcoin is over there, Ethereum is over here in this bucket. So that's a smaller bucket now. And then there's also that mix of like, okay, now you need to fight for the market share within that bucket. And obviously Solana's gained market share. And so, fighting back on all of this, like increasing performance stuff, it's going to take time. It's going to be choppy. It's going to be up and down. It's not going to be this steady wave of, we're just perfectly increasing the gas limit and all the apps come back right away. It's going to be stops and starts, and like, it'll be fun to see. Because it's going to be two totally different approaches of where Solana is and where Ethereum is. And we'll see like how strong the network effects actually are now, coupled with some level of increased performance versus the just like, obviously Solana is going to be more performant and always will be. But how much does that existing stickiness kind of help roll forward?
Yeah, and to the whole, I guess last thing on this is to the whole where, the idea we're all building the same thing. There's definitely differences, don't get me wrong. But one interesting point is Ethereum is working on its performance and Solana is working on its traditional decentralization. Second client launching this year and a verifying full node launching sometime, hopefully this year. We'll find out more at Accelerate. The team from Mithril, I think that's being led by the Overclock Labs team. They've been grinding on that. And again, like if who can kind of hit the end state of performant and decentralized first? Is it Ethereum adding performance, or is it Solana adding decentralization? It's kind of an interesting worldview as well.
Dan, do you have anything else you want to ask? Or
no, this has been a great convo.
Yeah, this was fantastic. John, thank you so much for coming on. This question always ends up a bit weird with the fund side, but I have to ask it. Well, I don't have to ask it, but what should people do? Like, how can they keep up with DBA, or is there anywhere that you want them to go to check out? Is there anything that you want people to read up on and focus on? Any final?
I'd say it's pretty simple to follow us. dBA.xyz, that's our website. I will every once in a while post a short book length post that I'm sure everyone just pops into ChatGPT anyway and asks for a summary, but I will write the whole thing nonetheless. Can go there and subscribe. We'll send out a post at some point again. And then otherwise follow me on Twitter for much more unhinged and just erratic takes that eventually work their way into posts.
Do we have any topics in the holster for your next blog post?
I have two that I'm not sure which direction I was going to go. And one, I actually had a draft that was mostly done on pretty much just like high performance chains of like very large posts of kind of going through the full stack there. TBD if I end up actually finishing it. I need to finish it if I'm going to do that. And then I had a couple of other like totally different directions I was considering going into of like new, like completely different chain architectures. I was thinking about doing like token valuations. I had a bunch. So TBD on the next one. Nothing about to come up though.
Okay, for what it's worth, I would love a token valuations piece. Cool. If that's something that you want to do, just throwing
fan
out
feedback.
ideas.
Welcome. Yeah, I was thinking about it, so maybe I'll shift that up.